Dividends and profit. First, we'll take a look at the idea of profit. So there are two views which are important here. One is the views of the economist and the other one is the views of the accountant in terms of what is profit or the idea of profit. An economist is of the view that the profit of an organization is ascertained by comparing the market value of its net assets on two dates, and increases or decreases of its differences gives profit or loss of the organization. Here net asset means excess of realizable value of asset over its liabilities. However, the accountant's view is a different one. It is of the view that market value of an asset is only relevant if the business is going to be liquidated. According to him, profit of a business is the difference between revenue gained during an accounting year and related expenses incurred in the same year, since a business is a going concern. However, if you consider the profit and loss account of a business, the net profit or loss is shown as an exact figure. But if two independent auditors work independently, may reach different figures of net profit or loss, and this is in most cases because of the difference in accounting policies and principles that are applied in arriving at a figure for net profit or loss. Therefore, according to an accountant, the net profit or net loss is a figure which needs to be arrived at and ascertained in a more impartial way. Now that is about the idea of profit. Next, we'll take a look at what is payment of dividend. For payment of dividend, the Companies Act 1956 is referred and allows dividend to be paid out of profits of the company for the current year after sufficient provision is made for depreciation. Dividends are paid out of money provided by central government or state government in India in pursuance to a guarantee by the concerned government. It is also paid out of undistributed profits of previous financial year. So dividend may also be paid out of current profits. Dividend may be paid out of current profits of the company in the current year. Another source for payment of dividend from previous financial year after providing for depreciation is the reserves created out of undistributed profit, only after providing depreciation in the previous financial year. Dividends can be paid out of reserves created out of undistributed profits. According to central government rule, such declaration of dividend can be made. Dividend can also be distributed based on all the profits earned in the usual course of business. They may also be earned out of trading or manufacturing or other business operations. The last item, payment of dividend can also be made out of capital of a company. Now that is a little bit contentious because what do you mean by capital of a company? A capital profit may emerge out of a sale of fixed asset. In fact, the excess of sale proceeds over its cost price. So what is a capital profit? A capital profit may also be realized on raising capital. For example, premium reserved on share issues, profit made on a resale of forfeited shares, and on redemption of debentures. So this is all capital profit. Now there is a looming and big question in regard to payment of dividend out of capital of a company. The argument exists because payment of dividends out of capital means the payment of dividends from assets, which is capital acquired with the paid up capital of the company. So that is the reason why it is slightly a big question. However, the following circumstances guarantee its payment. So capital profit, whether it is okay to pay dividend out of capital profit is a big question. But under the following circumstances, it guarantees payment. Now, what are those circumstances? First is payment of dividend in spite of the fact that profit and loss account shows a loss. So dividend can be paid despite the fact that profit and loss account shows a loss. Distribution of dividend out of sale proceeds of a fixed asset. In that case also payment of dividends can be done. The last case is that payment of dividend is possible out of inflated profits by charging revenue expenditure to capital. So payment of dividend can be done, or it's possible to do payment of dividend out of inflated profits by charging revenue expenditure to capital. So these are the circumstances under which payment is guaranteed. Payment of dividend actually is guaranteed. And this covers dividends and profit. Thank you.